Welcome to the Opportunity Podcast, where entrepreneurs come to learn from real buyers, sellers, and industry experts on the lesser-known growth opportunities to build their online business empires. We'll uncover tactics veteran online business entrepreneurs have used to build, buy, flip, and sell their way towards personal wealth. Sit back, grab a coffee, and get ready to uncover hidden growth secrets. The Opportunity Podcast starts now.
Hello, everyone, and welcome to another episode of The Opportunity. I'm your host, Gregory Elfrink, the head of marketing over here at Empire Flippers. And today I got a very cool guest for you, a man named Dom Wells. He is the founder of Onfolio, a good friend of mine. We've been friends for years. And he just recently turned his company, which is a holding company that buys businesses and grows them, into a publicly traded Nasdaq company, which is pretty cool. As far as I know, he is the first person I know, at least in our industry, who has done that. And we talk about that towards the end of this episode. But really what we talk about is growing a team, managing yourself as you level up as an entrepreneur. And I think all of these lessons are great. I could have talked to Dom for much longer than we did. And you'll notice this is a longer episode. Dom just had a lot of really good stuff to say. So let's dive into it. And I will stop talking. I'll see you on the other side as I interview Dom Wells. All right, I have Dom Wells with me. So Dom, welcome to the podcast. It's cool having you on. We've been friends for years at this point, but for our audience out there listening in, and maybe this is the first time they've ever heard from you, could you introduce yourself briefly and where you are in the world right now?
Yeah, sure, absolutely. I think it's actually my second time on the Opportunity podcast, so it's great to be back.
Play your cards right. You might get a third time, Dom. Sorry, go ahead, introduce yourself.
There's a bit of a lag here. I'm Dom Wells. I'm the founder of Onfolio. Right now I'm in Taipei, Taiwan. And yeah, that's me.
Awesome. For those who don't know what you do, walk us through a bit through your entrepreneurial journey. Like, we're going to get to Onfolio, but tell the crowd where everything kind of began and how you've leveled up over those years to where you're at right now.
Yeah, sure. I've actually been doing this just over 10 years. I think I started in August 2012. It's pretty cool reflecting on a journey when it's just hit that 10-year milestone. And I started out with very limited knowledge about internet marketing, SEO, any of those things. I started out basically with maxed out credit cards, maxed out overdraft, very little money, very little income. So I've come from very bootstrapper roots, like a lot of people who come on this podcast and who end up growing a business from scratch and selling it on Empire Flippers for a life-changing amount of money. So I started out, I was teaching English in Taiwan, didn't really want to do that anymore, tried a few other things, like tried learning how to invest in stocks or trade, and tried an MLM, tried lots of things, read the Rich Dad Poor Dad books, read 4-Hour Work Week, and I tried by failing, basically, which is kind of how I ended up overdrawn and not quite penniless, but I had a roof over my head and just got a new job, so I had him coming in, but basically pretty broke. And so I started out, I built a website, bought a domain name, scraped together a bit of money to buy some hosting and things like that and take some training. And after about 18 months or so, I was earning, I think, sort of $200, $300, $500 a month, which to me was nowhere near where I wanted to be, but it was enough validation to keep going. Like, okay, if I can make 500, I can make 5,000. Didn't really believe that, but that's what I told myself. Good motivation to keep going. And then sort of towards the end of, I think, my second year, I founded Human Proof Designs, which has been mentioned on Empire Flippers over the years. And I think Brian, who ended up buying it from me, has been on this show as well. But what Human Proof Designs does and did at the time was we did done-for-you affiliate websites. So I'd been browsing the Flipper listings and I'd noticed there were a bunch of people buying these kind of scammy turnkey affiliate websites where the seller would say, hey, buy this business, $400, it'll make you a millionaire overnight, super easy, obvious scam, but people were buying it. I know how to build real starter websites, why don't I just sell real ones? So I did that, and I realized very quickly I had to start a brand around them because I needed to actually explain to people how to use the website. So I started doing training and then people started saying, well, can you also do SEO services? Can you help us do content packages and things like that? So the product offering at Human Proof Designs today has expanded. And Brian, who bought it from me in 2019, expanded it further. And Human Proof Designs was really my first success where like I had life-changing money. So up until then, I'd been earning $1,000 a month, maybe $2,000, that kind of thing. But Human Proof Designs got me to, like, we did $1 million revenue in the 2 years, my final 2 years there. And I think it went on to do over 2 million in the end. And it was like, when I first passed the 10K a month threshold in terms of my personal income and was able to quit my job and sort of start traveling the world and go to conferences. And when you start being able to do things like that, that really levels up your game. It accelerates your learning. You meet a bunch of other people who are friends or become your friends, become your peers, and that allows you to mastermind. And so definitely HPD was kind of the genesis of all of that. And in 2017, I started to buy a few websites of my own with some disposable income. So I would buy websites off Empire Flippers, for example, or Flipper, or I think primarily there in the beginning. So I started thinking, okay, I'm going to build out my own portfolio, especially when I saw others in the space, like people like Matt Diggity doing that. And naturally, I started blogging about it and emailing the Human Proof Designs audience about it. And there were people in that audience who said, I actually don't want to buy a $500 startup business. I want to buy like, a 50K one off Empire Flippers, but I don't know how to identify the good ones. I'm sure you'll say they're all good.
They are definitely all good, Dom.
Okay, let me phrase it a different way. I know they're all amazing, but I don't know how to run them after I buy them.
That doesn't mean you can't buy them, though.
Right, you just press a button.
Easy.
Basically my audience were like, can you teach us how to do it? Or can you do it with us, do it for us, we'll pay you, that kind of thing. And so that's where I had the idea for Onfolio. And in all honesty, I was kind of ready to move on from Human Proof Designs. I felt like I had leveled up and I was just ready to do the next thing. And maybe I was getting in the way of the business and it was getting in my way. So I founded Onfolio so that any potential buyer for Human Proof Designs, they come to the acquisition knowing you've already got this other thing on the side called Onfolio. It's not like I sell it and then I start up another business, which doesn't really have that much overlap, but it's in the same space. So better to just do it first. And also it validated for me that Onfolio was a good idea. So for a couple of months, I ran both businesses and then I sold Human Proof Designs, and it was the right decision because I grew Onfolio faster and larger than Human Proof Designs. But then as far as I'm aware, Human Proof Designs ended up doubling over the next year or two. So, it was good for everyone involved. So I moved into Onfolio.
That's a cool story. I guess I've never really knew your full backstory there, but I wanted to stop you there because I think there's a few interesting lessons, for anyone out there who is building their own business, building their own, say, an affiliate website or, I don't know, e-commerce business. There's always these other things you can sell. Like you learned the basic skill of building a starter website, right? And that took you to $500 a month. But then that skill set, when you were able to sell it to other people, like package that skill to other people, you're really able to level up big, which I think is just awesome. I actually didn't know that your background came from where you did. You mentioned MLM. Funny enough, I actually got started in internet marketing through MLM because my dad was trying to convince me not to buy a coffee shop. He's like, this is way cheaper. You don't know anything about coffee. Do this instead. Like, okay. That's what led me down the whole internet marketing rabbit hole myself. So that's cool. So with the story with Human Proof Design, so you sold it, but you started Onfolio together, but you started to kind of lose the steam for Human Proof Design. What was it about Human Proof Designs that you felt like you kind of maxed out that led you to starting Onfolio? Like what was like the emotional reason, I guess?
I think there was probably three things. One was I didn't know how to grow it beyond where I was. So Dan from Tropical MBA, Dynamite Circle, he did a talk about this. And I think he mentioned it in his book Before the Exit, but you can kind of grow a business as far as your competency allows you to. So I felt like, okay, I've grown this to $1 million business. I don't know how to grow it to a $5 million business. So maybe this should be what I do. I just grow businesses to $1 million and leave, and then do another one.
On that note there, I've heard the entrepreneurs say this before, and I get it as well, but I'm always curious on it. Maybe you could shed light on this. So you felt like you didn't know how to grow it beyond that $1 million business, yet you did know how to grow it to the $1 million mark. What was it like between those two things that gave you the confidence to grow it that far? Or did you feel it was more like serendipity? And then when you got up to the certain level, you're like, oh God, I don't know what I'm doing? Or like, why did you feel like you didn't know the roadmap to go forward?
To be honest, I'm not sure if I actually believe that thing anymore. I think maybe you're better off leveling up within the thing that you're doing than jumping into the next thing. But at the time, that was maybe kind of the working theory I had. I think you can grow a business a certain way just by getting good at one thing. And a lot of it's marketing. Like a lot of businesses can become $1 million businesses or mid 6-figure businesses because the founder's good at one thing. And then they just kind of sheer passion and force of will and hunger gets them to that level. And then when they get to that level, they kind of need to maybe go back to the bottom of the mountain and start climbing it again if they want to learn a new skill. Or there's this expression I've heard a few times, which is like, what got you here isn't what's going to get you there. And so now you maybe don't have the hunger anymore because maybe you're making 10K, 20K a month. You get shiny object syndrome. You get a lot of confidence where you think, I could do anything. Like you think, I'm going to go buy a restaurant. Saw someone speak at a conference once where they built a business and they got really good at it. And then they and all their friends went out and bought a pub because they were like, yeah, we're kick-ass entrepreneurs. Let's go buy a pub. And the pub failed because they were like, turns out running a pub is very different from selling Facebook likes. So I think people get shiny object syndrome. And I think it's really that you can kind of get to like a low 7-figure, high 6-figure business simply by rinsing and repeating one thing. And then when you get there, you have to just learn more skills, slow down a little bit and think more strategically. Whereas before that, you can just work tactically. And some people push through and they go on to build incredible businesses, whereas others just maybe bail out and just do 0 to 1 again.
Yeah, that makes sense.
I think it's really just a lack of knowing. You drive business through the windshield, not the rear view mirror. And so a lot of the time you can't see out the windshield. So I think people are like, well, I know how to get here because I've done it before, but I don't know how to get there. So maybe I'll just go back and get here again. And the other thing is when you get used to your income and you're struggling to grow and maybe you've got some fear, maybe like I think I had something like 45K a month in payroll expenses. So there was a lot of, okay, I've got to make sure I can pay everybody's rent every month. And if I sell, maybe I can get $1 million or maybe I can get 500K, maybe I can get 700K. When your net worth is 100K, or you've just got 50K cash in the bank, that's a very attractive option. So I think that's why a lot of people, I'm just going to sell. And perhaps if like 90% of your net worth is in that one asset, maybe you should sell. So I think that's kind of why a lot of people take that option.
Yeah, that makes sense. I've often told entrepreneurs, and some people disagree with me, and they have good reasons. So I'm not saying like this is gospel truth, but I do think in a lot of ways your business begins when you sell your first one, because I imagine, and I know you said you already validated Onfolio while you're still running Human Proof Designs, but I imagine that exit, that lump of cash, the liquidity allowed you to do things that you probably couldn't have done if you hadn't sold Human Proof Designs, would be my guess. Do you think that's pretty fair?
Yeah, I mean, I bankrolled Onfolio with just my exit money in the beginning. Like we were probably making 3 to 5K a month revenue when I hired Esby, and then I think Alejandro came from Human Proof Designs with me. So we were probably spending 10 to 15K a month on people's salaries, and we weren't earning that. And I wasn't taking a salary. So, the reason we were able to do that was because, I had a big chunk of change in the bank. And, I think it was probably 6 or 7 months until we were break even. So I couldn't have done that without A, the money, and B, the confidence that I knew the plan was going to work. And I think part of the reason I grew Onfolio to beyond HPD in half the time was because it was a better business model or with more lucrative monetization. Or maybe it was just because everything's easier the second time.
Let's talk more about Onfolio. So give a 30-second pitch of what Onfolio is for our listeners. I have already described it a little bit in the intro, of course, but what's your elevator pitch for Onfolio? And let's talk about the journey of you growing that and a bunch of the other stuff around this, because this is a pretty interesting business.
Yeah, I mean, what Onfolio is now is quite different from what I started out as. So yeah, it would be good to walk people through the journey. What it is now is essentially a public holding company which buys online businesses. So think of holding companies like Berkshire Hathaway or That's probably the one most people know. And we buy online businesses and grow them and hold them long term.
And how did it begin? So did it begin as just like you building and buying and flipping websites, or what was those very beginning stages of Onfolio, like long before you went public, right?
Yeah, I mean, going public wasn't even on the radar when I started it. We started out really as a service provider, almost like a glorified SEO agency, where there were a lot of people out there who wanted to get into buying online businesses. Like I mentioned earlier, they either didn't know how to vet businesses, they didn't know how to find them, or they didn't know how to run them post acquisition, or they just simply didn't want to. So a lot of real estate investors who think of online businesses as like a digital version of real estate investing, but online business actually is quite an active asset class because you really have to be involved. So what we're doing was turning it from an active business to a passive business, which is some of the sales copy on the EF Capital page now. So, obviously
Yeah.
thinking along the same lines there.
Just following the greatness before us, you know what I mean?
Yeah, not accusing you of anything, but I saw that sales page and I was like, oh yeah, cool. Like that's the pitch. That is what it is. So that's what we were doing. That's what you guys are doing now. But we worked with individuals rather than pooling capital like EF Capital does. And then at the same time, I was also trying to buy my own businesses with my own cash. So pretty much all of my Human Food Design's exit money went into just buying more online businesses. And then after about 18 months, I guess, of doing that, I was like, well, this kind of sucks because we're just a glorified SEO agency, really. I think a much more lucrative thing to do would be to pool capital and raise money and become a holding company. And one of the reasons for that, again, is probably a similar thesis behind EF Capital. But in 2019 and 2020, I think we're involved in something like 35 acquisitions. So it could be 50K, could be 500K. And the 1 year cash returns average was 36%, which was really good. But we had some businesses that got like 150% because we bought like added eZoic on them straight away and they tripled. And then we had other businesses that we bought them and they tanked. And again, we had like 35 businesses, 2 of them tanked. That's less than 10%. It's a pretty good track record. But it sucks if you're that one investor who bought a business for 100K and you got wiped out. So I was thinking, how can we get that 36% for everybody? And the answer is pooling capital. There's also an operational element to it as well, because if you want to diversify, let's say you have to buy 10 businesses instead of one. So if you buy 10 businesses where you've got $1 million to deploy, you buy 10 100K businesses, you're going to get spread too thin, or you're going to have to hire a team to run those 10 businesses, and they're going to cost kind of roughly what the businesses are generating. So you're not really going to make any profit. Or you put $10 million together, and then now you can diversify, but you can also have a team and there's plenty of cash flow. But like, how many people want to invest $10 million into online businesses? So the answer is you pool money. And EF Capital is one solution, and Onfolio is a pretty different one. It's not like they compete, but it's another solution. And there are funds out there, like Domain Magnates had a few funds, and plenty of SaaS funds out there as well. So we weren't exactly trailblazing there. It was a pretty basic concept. Yeah, we realized, okay, we should pivot and do this instead. And while I was considering this, basically I connected with someone who said, not only should you do that, but you can actually take it public early rather than take it public later on as a big kind of, we made it, let's exit type thing. You can go public early and use that as a way of accelerating your growth. Yeah, 10 years ago, broke English teacher, and here we are.
Founder of a publicly traded company. Very cool. I want to get into that, but before we get into the long journey of you going public, because I know you and I talked offline about that, and it sounds like it was a bureaucratic paradise for you. So I do want to get into that a bit. But before we do, let's talk a bit about your criteria for when you do buy one of these businesses for Onfolio's portfolio. I know when you first began, you were buying just mainly affiliate content sites, but has that changed? Like, what kind of criteria do you look for now? Is it still mostly in the content business model, or is there a bunch of other stuff you guys are looking at now?
Yeah, it's the latter. In fact, we don't really look at many content affiliate sites anymore because I think the risk of those businesses has increased when they're heavily reliant on SEO. I think it's hard for us to justify putting money into them. So kind of backing up a bit, we're kind of industry agnostic. We don't want to go into any of the sort of unsavory niches or ones where there's maybe regulatory risk like cannabis or something. Actually, I think there's a lot of opportunity in cannabis, but for us, there's also opportunity elsewhere as well. So, why make it difficult on yourself? Casino and gambling and porn and stuff like that, not really our cup of tea. But other than that, we'll consider everything. And then in terms of business model, yeah, we have e-commerce, we have WordPress plugins, we have courses, we have a lot of service-based businesses, which makes sense given my history of running service businesses. We don't have SaaS, but we probably will one day. We just haven't found one that fits us yet. We actually have a marketplace type business. So what we look for, a business that's growing, a business that isn't too much of a kind of easy business to copy. Like we see a lot of businesses that are on the market that it's like, oh, this is the same as that other one that was sold 6 months ago. And so it kind of tells you that it's very easy to just start a copycat of that business. We don't want to go for something where there's a lot of concentration risk. So that's kind of why SEO gets ruled out for us a lot. Say with an FBA business or an e-commerce business, it could be too much of their sales come from a single product, or they're relying on like one Facebook ad to continually work. Ideally, there's enough cash flow to replace the founder, because often the founder works for free and you take over the business, you need to hire someone to replace them. So that's a huge one as well.
Yeah, I didn't realize you expanded to so many different business models. So usually I've told people, like, when they think about diversifying business acquisitions, like, I tell them to stick within the same business model. But I guess you've grown big enough now that you can afford to replace the founder with like an actual team structure and still have cash flow. But as you expanded into those different business models away from your more tried and true content businesses and service businesses as well, did you have like some moments of trepidation there, or were you pretty confident, like, yeah, marketplace, easy, I can do it? Like, how did you like decide, yes, I can do this business model? Because they can be pretty different from each other.
Yeah, and I think for the first 18 months, I just told people we were only going to do content because it was our bread and butter, and we didn't trust ourselves to move into other business models. The reason we did was we acquired an e-commerce business that was a no-brainer. We got it for 1 year's profit, where we could essentially pay off the business within 1 year using the cash flow. So basically, we got a free business, and it was an e-commerce business. And we were like, okay, I guess we're going to go into e-commerce now. And yeah, it was hard. Like, we grew it really well at first, and then we kind of ran into cash flow issues like all e-commerce businesses do. And then we recently have grown it really well again, and it's probably the last couple of months, it profited more, like about double what it was profiting before we acquired it. And that's after paying for additional team members that we hired. So it's going well now, but it was a struggle. So that's why we haven't gone kind of balls to the wall with e-commerce, because it's like, oh, actually, e-commerce is kind of annoying. We've kind of expanded just gradually. Like, we don't go as fast as like a lot of the aggregators do. And
to be honest, that might be a good thing that you don't go as fast as them with what's happening right now.
yeah, I mean, we make mistakes just like they do, but I think our mistakes don't kill us because we do it at a slow enough pace to adjust, and we don't do it in a large enough size to be overwhelming. But yeah, I mean, it's been challenging, and there's plenty of people say to us, you should just stick to one vertical, or you should just stick to one niche. And I think, yes, that is an acceptable option, but also you don't have to. And also, a lot of people speak theory, just based on what intuitively sounds correct, not necessarily what is correct. So, yeah.
It sounds like with a lot of what you're saying, your criteria, you're basically trying to avoid a traffic or monetization, like single point of critical failure. So I'm assuming that like you would still look at something with SEO. You just don't want it to be like 80% of the traffic driven by SEO. Is that pretty much right?
Yeah, exactly. It's just about risk and diversification and so on.
Do you find that your businesses have like a pretty even split, say across like 3 traffic channels, or what does that makeup usually look like for you?
It really depends. Like, there's businesses we look at, like, 80% paid traffic, Facebook ads, something like that. There's some where it's 80% email. So there's still concentration risk sometimes, but it's just like, is that risk Google versus email?
Email's a lot safer than Google, that's for sure.
Yeah.
Well, let's talk about one of your acquisitions you did. So you acquired a $1.1 million business, and you grew its net profit by 50% in that first month of the acquisition. So what changes and strategies did you make like achieve that? I mean, that's incredible growth. I have an inkling of an idea. I won't say it because I want to see if I'm right, but tell me what you guys did.
Yeah, it was actually It wasn't the first month. We have grown businesses by 50%
Whoa,
in the first
Dom,
month
slow
before,
down.
but
You're ruining the clickbait, man.
not the 1.1 million one. I think it was about 3 months, so it was still pretty fast.
Yeah.
That was a service business. It was a productized service. So we basically improved fulfillment. We actually took on a few costs in the first month or two, which is why we didn't grow that quickly in the first couple of months. But we drastically reduced churn and increased fulfillment. And what that did was, it was a service-based business in the SEO industry, and SEO service providing is more or less a cesspit, which was not our words. That was the word of a client. And we just improved the offering and had very genuine sales calls. And there were some clients out there who were like, yeah, we've tried everybody and you guys seem a lot more authentic. And after working with you for a month, you seem pretty good. So we're going to write you a big check every month. We also improved the efficiency of the services. It was kind of ironic because we said to the seller, we're not going to fire the team or anything when we come in because we don't do that. But some of the team members were basically being essentially scamming the seller because they were not doing the work they said they were, and they were selling stuff on the side, like poaching clients and stuff. So we kind of got rid of some of them, and that cleaned things up as well. Yeah, so that's pretty much what we did. We just improved the back end operations and the quality, and things turned around pretty quickly for that one.
Went a different path than I expected, but some of it was right. So I was thinking that you probably did some conversion rate optimization, because usually when I see something that's like super fast growth, almost always it has to deal with CRO. But you kind of did that by improving the offer and ultimately the deliverables. So operations, that's another side of the coin. Not a lot of entrepreneurs think about the back end of what you can do to improve it.
Yeah, that's why we like buying those businesses.
Yeah, exactly. With your portfolio of all these different businesses, do you combine the back ends, or is maybe you have a brand manager of 3 different businesses, or are you using your portfolio as a synergy to grow something? So you got a fitness content site and you're selling jump ropes, e-commerce business. Are you utilizing both of these businesses to help everything grow?
Where it makes sense to, yeah. A lot of times it actually doesn't make sense. I'm thinking about doing a talk on this, actually. Mad Singers is doing a SEO conference in Saigon in March, and he asked me to speak. I'm thinking about talking about this topic. So yeah, it'll be interesting how it goes now. We can do a dry run.
Well, I'm very interested, yeah.
Essentially, I think the thing that a lot of people think about intuitively, maybe don't know what it's called, is operating leverage, where you think, okay, I need an SEO manager, I need content writers, I need link builders. So in order to justify the cost of those, I'm going to have 5 businesses and use the same team across all 5. And then as I add on a 6th business and a 7th business and an 8th business, my team's cost doesn't really go up, or it doesn't go up very high compared to the revenue that I'm adding onto it. And so that's kind of how Onfolio started scaling. The problem is your team ends up getting spread too thin quite quickly, both in terms of physical bandwidth, but also in terms of focus and just what their brain is thinking about, in the shower. And you have a growth idea, you've got 15 different properties, which one are you going to do it for? So a lot of the time it can actually harm the portfolio more than it can benefit it. So our solution was, we'll buy bigger businesses so that they can have a dedicated team and run it a lot more decentralized. I also think synergy is overrated in terms of how it can grow the business. So you might have an FBA aggregator who thinks, oh, well, we should buy Amazon affiliate sites and then replace all of the products we recommend with our own products. And that sounds amazing. But I think doing that's probably going to have 5-10% revenue growth to your FBA brand versus buying an Amazon affiliate site, spreading your team both in bandwidth and competency too thin, and one of the businesses dies. So that's why I think synergy is overrated. But there are instances where synergy exists, because now we run 3 SEO service businesses and we have different people running them, but we have that kind of shared learned knowledge of how to run them, which we can apply to the businesses whenever we acquire a new one. I think that's essentially, it's like a hybrid model, and I think it's going to evolve because it's just not one size fits all.
So I want to move into deeper into what you just said there, because I think that's super interesting. I don't know if I fully agree, but I definitely see where you're coming from. I think synergy is overrated in the way you stated, for sure. But in terms of, you mentioned diversification and exceptional talent, these are the keys to sustainable growth. We've talked a lot about teams in general already on here. I know Human Proof Designs had a pretty big team. I'm not sure what size is Onfolio at right now. Like, what's your head count?
Around 30.
Around 30. So to not ruin their focus and make sure that are operating in kind of like their zone of genius and competency, how do you structure your team right now on Onfolio to make the best use of them? Like, how do you divvy them off between these projects and businesses?
Basically, yeah, when we started out, we were like, okay, we're running 6 content sites. We have an SEO person. We have a head of content. We have a link builder. Let's just fractionally use them across every property. It works to some extent, but the problem is you end up being spread too thin. You miss things, or you don't innovate, or you don't focus on any one thing. So everything just kind of floats around and stays afloat, but doesn't necessarily grow. So our solution was, well, if we buy bigger properties, then we can give businesses dedicated teams and unlock entrepreneurial talent like our GMs or kind of mini CEOs, as we call them. At the moment, we're kind of in a hybrid of that where as we buy a new business, we want to look for one person to come in and run it. But because of where we've grown from, we have some people who are still running like several businesses, and we're probably going to end up decentralizing even more and maybe even have different teams in their own Slack channels and stuff. Some of the team might listen to this and be like, wait, I didn't know that. But
surprise, plot twist.
yeah. No, I don't even mean different Slack channels. I mean different Slack servers. So just really keep the teams separate. And that allows the teams to form better bonds, have better focus, get better momentum, have better culture within the teams, and just generally achieve better results. That's the kind of working theory we have right now, and we're slowly moving towards so that we can see how it evolves.
I like that Slack server idea because if you're buying big enough business where they inherently warrants a whole team unto itself, then like you could still have cross Slack communication by doing like the Slack integrations between like the communities or having, I don't know what you call the people that run your businesses, but say you hired a CEO, you can have your CEOs
Minions.
like meet together, your minions, you have your minions meet together, these plebeians to talk about your businesses you have. Oh, but I do like that. Is there anything else you're doing to try to make that cleaner and more sustainable?
No, I mean, really, I think that's the bulk of it. I think the old model can work, just maybe it doesn't work for us. So this is why I say one size doesn't fit all. Sometimes there's a good use case. So, for example, HR doesn't really need HR to be decentralized. But at the same time, we have someone who's running his own portfolio and he wants to offer someone a job and he wants to just be able to offer the job, without having to wait 2 days for HR to put like a job offer letter together and so on. Where people need shared services, we have it, but where people don't, we don't. It just doesn't make sense to force it. But what we want is to get people together and share best practices or share insights that they learn. And so things like giving team members all shares in Onfolio, that means that they're going to be incentivized to help each other. And if one business leader learns something, he wants to share it with the other business leaders because as every business leader levels up their own portfolio, all of that benefits Onfolio, which benefits them. So it keeps people connected while being separate.
Yeah, I like that giving shares. I want to talk about you guys going public, but one last question on the business itself before we get into the story of going public. When it comes to Onfolio, I feel like you probably have a similar thing as to what I call the agency problem. And the agency problem is I have a marketing agency. I'm getting all these clients and I'm doing all this work for my clients, but I'm not doing any marketing for my own agency. Like I'm not eating the food I'm selling kind of thing. So when it comes to marketing Onfolio, how do you balance your team and your time from growing the businesses you bought while also trying to grow Onfolio itself as a brand to lead to even bigger acquisitions down the road?
It's kind of the same thing. Like in the beginning, everybody did everything, whereas now we really have separated out those roles. So we have someone who's director of comms who actually set up this podcast, and his job is working with the investor relations team on communication and crafting narrative and trying to find ways for myself and other members of the C-suite to go on podcasts, and maybe he'll work on the copy on the Onfolio page. And then we do have someone who's good at brand building, and maybe he will cross all brands because he can do customer avatars and brand audits and stuff. And I could say, hey, don't bother him. He's working on some of our businesses. He shouldn't work on Onfolio, but he's got the expertise I want. Then they are going to gravitate towards pulling each other in, which is why sometimes I think, okay, let's get separate Slack servers so you stop bothering each other, because people don't know the other person's bandwidth. The short answer is you delineate. So I'm not really involved with any of the brands we own. I'm just involved with growing Onfolio. My buckets are really deal flow, talent, and investors. So going on podcasts allows me to kind of really tackle those buckets at the same time.
Nice. Well, I'm glad I'm able to help you hit your KPIs, Dom. I will send the invoice later to you. So I want to talk about you actually going public. So we're near the end of the podcast. And I want to hear this story before we do the rapid fire section. So you started trying to go public in 2019 or 2020, right? It was like 2 years ago or something like that, right?
Yeah, it was. I kind of decided to go down this route around April 2020. And when you're bored with COVID, you think,
when you're bored, just create a public company.
you're just like getting a bit down with the pandemic. What shall I do? But no, yeah, it was around April, and then it was around September that year, so September 2020, basically 2 years ago, that we kind of announced it and we started like raising money and going down that path.
So walk me through the mechanics of going public. Like, what are the simplified steps of what you have to do and have everything in order to make this happen if someone else wanted to do it?
Well, the steps aren't simplified, but the simplified checklist, I guess, is you have to have your financials audited. And this can be a moving target because they need to be audited every quarter. So you think you've caught up, you've got them audited, and then the next quarter rolls around and you've got to start the process all over again. You also typically need to raise money because it costs hundreds of thousands of dollars to go public. And depending on how you go public, whether you're doing an IPO like we did or whether you're doing a direct listing, depending on which exchange you're going on, you might need to work with an investment bank, which is a process because you need to, first of all, get the investment bank to listen to you and decide they like you and they want to take you public. Then there's a process of being like, okay, now we need to put the pitch deck together, which in our case is an S1 registration statement. Then you need to apply to the exchange. So we had to apply to Nasdaq. And those are the steps. They're actually fairly simple, but a lot of legal work, a lot of paperwork in each of those steps.
Simple in concept, crazy in actual execution, I imagine.
Yeah. And then the final step is you have to convince people to buy. People have to like your company and want to invest in it. So that's the 2021, not so much of a challenge. 2022, very different story. So
your goal of doing this, so most people go public like the founder's big exit, but you mentioned already on this podcast that wasn't so much the case for you. You were looking to go public mostly to raise money to acquire more businesses. So you viewed it as like your capital raising mechanism. Is that about right?
Just the beginning without sounding like trying to be wishy-washy. But yeah, for us, it's not the exit. It's the fundraising mechanism. And I know a lot of people refer to going public as liquidity event. So for them, it's getting liquidity out of their business. It's an exit. But at the end of the day, companies use the capital markets to raise money. But it also, being public, like we could have raised money privately. So why public? Well, it's already given us an increased visibility. We have a lot of different people reaching out to us, both in terms of investment banks that want to help us raise money, people that want to help us find businesses. We actually have investment banks now trying to help us find businesses, which is a new thing. I'm not really sure if an investment bank knows what an online business is, but we'll see. We also have, when we're having conversations with sellers, they take us a lot more seriously. You know, if we want an earn-out because we're concerned with something in their business and we just want to use an earn-out to kind of mitigate that potential risk, a public company, a US Nasdaq public company to be specific, is something that people are going to trust a lot more rather than me being some dude in Taiwan, a Nasdaq company that's interested in their business. So people aren't going to sell to us for a lower price or anything like that. But if we say, yeah, we've got the money in the bank, they're like, yeah, I know you have. I saw the press release. Or if we say we'll pay 70% upfront and 30% over 2 years, if they like that structure for all the reasons it can be beneficial for them, a lot of the time people are still scared. Well, what if you don't pay? What if you screw up the business? And being public kind of gives us a lot more trust. And finally, I've talked a lot about hiring talent. I think a lot of people get excited about wanting to work with a public company. So not only are we able to attract people, but we're able to reward them because we can issue them shares. A lot of companies give their employees profit share or equity or phantom equity or whatever, but we can give them liquid equity that they can sell on the stock market and they can see the value go up or down. So that to us solves a lot of the key problems that we saw with growing something big in the industry. That was the key motivation. And we've only been public like 40 days, but so far we're seeing the thesis play out already.
Yeah, so you'd say all the effort you put in to make this happen has been worth it for you?
Time will tell. I'm pretty confident it's going to work. Ask me again in 10 years.
We'll get you on. That'll be your third appearance on the opportunity.
Yeah. I feel like still having technical issues with my AirPods. Yeah, it's just too early. It would be disingenuous of me to say it's worked because it's so early. That's kind of what I'm getting at.
I'm excited to see what happens. I believe the first one in our space, at least, that has gone public. It was done this whole process. It's been really cool to watch from the sidelines on it all. So you mentioned in 10 years, ask you again. So let's do that last question and then move into the rapid fire section. But what is your ultimate goal with Onfolio? Is your goal to do a big exit of some sort, or what's your plan?
Well, I don't need to do an exit because we're public already. Yeah, sure, I can sell some or all of my shares. I don't think I ever would because I'm very bullish on what we're doing, and the longer I hold, the more value you get. But also when you own public shares, you don't necessarily need to sell because you can take loans against those shares. Or, I could sell 10% of my shares or something. At some point in the future, if we're $1 billion company and I've got $100 million worth of shares, I can sell 10% of my shares and be very comfortable. That's what we're going to grow out and the size we're going to be. But when I think long term about the ultimate goal, there isn't really, the idea would be I keep doing this until I retire. Really, then the plan there is what do I think Onfolio can become? And I actually don't see any reason why we become $1 billion company. There are multi-billion dollar holding companies out there already. There's enough businesses for us to buy. There's enough people who want to sell. There's enough talent who want to work with us. Given enough time and access to capital, we can just keep scaling. 10 years from now, that'll be a fun conversation to have.
Yeah, wait, the third episode of The Opportunity with Dom Wells, how I became $1 billion holding company. That would be good clickbait for sure.
Well, hopefully clickbait won't be a thing in 10 years.
Might be a voice bait. We'll see. All right, let's move into the rapid fire questions. So this is just 3 quick questions. Give me 3 quick answers and let's do it. You ready? Are you ready for the rapid fire section, Dom?
We'll find out when you start firing off at me.
That sounded super rapid confident right there. That's the kind of confidence I like to see in these questions. All right. Question number 1. What are the best hidden investment opportunities that you see with online business today?
I was thinking about this question a lot, and I'm going to do a really slow answer to the rapid fire question. I just think online business investment in itself, the best investment opportunity out there. I don't think it's hidden in the sense that the rest of the world doesn't know about it. And we do. So we're like, what's the hidden opportunity? And it's like, well, no, this is it. You don't need to look for something hidden within this. I just think it is a great investment opportunity. So people should just invest in the space.
100%. I agree with you. What tools or resources would you recommend for digital entrepreneurs looking to grow their business?
I think you're going to need something like Ahrefs or SEMrush. Pretty much just that. Those are the most important tools. Other than that, your resources, just the internet content. You guys put out a lot of educational content. A lot of other industry experts do as well. Onfolio is just, we're launching a publication. We're going to call it Discourse. And the idea there is kind of a built to sell angle. So it will be people who want to build a business, grow it and sell one day. Essentially, we're going to teach people how to do that. And our philosophy is we want to teach people how to build a business that we want to buy one day. And it doesn't necessarily have to be bought by us in the end. They could come to Empire Flippers and sell it, but we want to share our philosophy with people. We're like, listen, we're fussy about what we buy, so we're going to teach you how to buy something that we would like. It's like I used to say with affiliate sites, you should build something that Gail, Brett, and Mark Webster would like, because then, it's a good quality online business, because those guys are also super fussy. That's a great resource, or it's going to be a great resource. So I think the point there about content and resources is the best thing that people can do in this space is just keep learning, keep educating, and keep practicing. So it's not so much about using a tool as it is about making yourself the tool.
And if you do the Discourse publication, which I think is a great idea, I believe I know who's behind that working with you. I think it's Juliet, yeah?
Yeah, correct. Yeah, she's great.
Yeah, she's awesome. If they do
yeah,
choose...
she says hi, by the way.
Oh, good. I'll have to message her. If your customers do choose to read discourse and they decide not to sell with you, they sell with EF. The beautiful thing about that, Dom, is Onfolio can still buy that business, right? Because you just buy it from us. So it's a beautiful circle here.
Yeah. There you go. Those overrated synergies we were talking about.
These overrated synergies, yes. All right. My last question for you, the hardest question in the entire interview. Tell me, Dom, out of all your years working in the online world, what has been your funniest moment?
I think it's probably when I won the Chiang Mai SEO meme contest. And it's funny for two reasons. Basically, Chiang Mai SEO, really cool conference in Chiang Mai, Thailand, SEO conference. Matt Diggity hosts it. Hasn't been on for a couple of years, and I think the SEO industry's really missed it. So hopefully he does it next year. But they do a meme competition where you have to do an SEO meme, and it's not that difficult to win because SEOs are actually, we're not very funny. So you just have to do a moderately funny joke and you win. Just trying to stay humble there. So the trophy is in itself a meme. It's like 7 feet tall, really kind of cheap, plasticky, and I'm pretty sure it was almost bigger than me. So I come up on stage to receive this trophy, and it's huge and it's hilarious. But it gets better because I'm thinking to myself, how am I going to take this from Thailand sort of back to Taiwan? I was speaking to Diggity that night, like, oh man, I don't know how to get this trophy home. I guess I'm just going to like check it in or something. He said, I'll just leave it. Like, don't worry about it. It's cheap. It's just a joke. Don't worry about it. And I was like, no, I'm not going to leave it. Like, I know it's kind of this novelty trophy. I'm going to cherish it. But woke up the next morning, kind of hungover, need to go to the airport to get a flight. And I'm like, you know what? I'm just going to leave it in my Airbnb. And 2 months later, Matt Diggity goes to his dry cleaner or something like that. And the trophy's sitting in the dry cleaner's like lobby. And it's like Chiang Mai SEO meme contest winner or something. And he's like, what? He said, where did you get that? And the person was like, oh, your friend gave it to me. Like, I didn't give it to anybody. I just left it in my Airbnb. So Matt Diggity's dry cleaner must have been the same person hired to clean my Airbnb, and she just kept it. So like, you know, he makes a big deal about it. He's like posting it on Facebook, like going, oh, I can't believe you left the trophy here. It was just a hilarious outcome. Yeah, that's probably the funniest experience I've had.
Didn't they give the trophy? I was there when you won. That thing is massive. I loved it. But didn't they use it again? Like, it was kind of like almost became like a passing of the torch to the next meme lord.
The next person who was there the next year, I wasn't there. So, you know, it was wide open for somebody else to win it.
Obviously you would have still been the lord of the memes. If you...
I'm never going to win it again after this.
You just don't ever enter again. Give other people a chance, Tom.
It became a meme in itself because Charles Float did an SEO contest like 2 weeks later, and it was lucky draw, and I won somehow. Like, thousands of people entered and I won. So it just became a meme that I always win the SEO contests. Yeah, I saw that the next year someone else won it, and he did what you should have done with it. Like, he took it out on the town. There's photos of him all over Chiang Mai, like clubbing with this trophy. And he probably took it home with him, as he should have done. So I was like, oh yeah, I should have just done that. I didn't realize it was the same trophy. I figured Diggity bought a fresh one for him. So that's cool if it's the same one.
I was there for that guy's Chiang Mai SEO too. I remember him being big, but yeah, I don't know. I'll have to look. But anyways, Dom, it's been a pleasure having you on board on the podcast. Always a pleasure to talk to you, man. If someone wanted to find out more about Onfolio and you, and what was just the best way for them to contact you and reach out?
I'm personally pretty active on Twitter, so people can just pick my handles, Dom Wells Onfolio. But if they want to learn more about Onfolio, it's just onfolio.com. Either of those are great resources.
Awesome, man. Well, thank you so much for coming on. We'll put all the links in the show notes for everyone in the audience. Go check out Dom, send him a request or shoot him a DM on Twitter. Really, really awesome dude. And Dom, thanks again for coming on.
Yeah, thanks for having me. It's been great.
There you have it. I hope you enjoyed it. I hope it got you inspired at all the different things that are happening in this industry. And of course, if you just want to buy a highly profitable business, you can always go to empireflippers.com/marketplace, or maybe you want to make an exit of your highly profitable business, and you could go to empireflippers.com/sell-your-site. I've been your host, Greg. If you enjoyed this episode, make sure you leave a review, give us a like, a follow, share it across social media. Talk to you all soon. See you on the next episode.